Chapter 1, Introduction to Commercial Banking. Banking Structure. Commercial banks are financial institutions that offer a wide range of services, such as accepting deposits, providing loans, and facilitating other financial transactions. They play a pivotal role in the economy by promoting economic growth, managing liquidity, and supporting business activities. The structure of commercial banking in India can be divided into the following categories. 1. Public sector banks (PSBs). These banks are owned and operated by the government. Examples include State Bank of India (SBI), Punjab National Bank (PNB), etc. 2. Private sector banks. These banks are owned by private individuals or organizations. Examples include HDFC Bank, ICICI Bank, etc. 3. Foreign banks. These are international banks with branches in India, such as Citibank, HSBC, etc. 4. Cooperative banks. These are cooperative societies that provide banking services to their members. They are governed by both state and central laws. 5. Regional rural banks (RRBs). These banks focus on providing financial services to rural areas, especially in agriculture and small-scale industries. History and growth of Indian banking. The history of banking in India dates back to the 18th century. Here's a brief overview of the evolution of Indian banking. 1. Pre-independence era. The first modern bank in India, the Bank of Bengal, was established in 1806. B. The Imperial Bank of India, founded in 1921, later became the State Bank of India (SBI) in 1955. C. In the early 20th century, the Indian banking system had a limited reach, catering primarily to urban areas and elite classes. 2. Post-independence era. After independence in 1947, the Indian government recognized the need for more inclusive financial services. B. Nationalization of banks. 1969, the Indian government nationalized 14 major commercial banks, followed by the nationalization of 6 more in 1980. This was aimed at increasing the reach of banking services to rural areas and promoting economic development. C. Liberalization and growth. 1990s. In the 1990s, with the liberalization of the Indian economy, private sector banks were allowed to operate, leading to increased competition and modernization of banking services. Banking sector reforms. The Indian banking sector has undergone significant reforms since the 1990s, aimed at improving efficiency, competitiveness, and financial stability. Key reforms include 1. 1991 economic reforms. These reforms led to the liberalization of the banking sector. Private sector banks were allowed to enter the market, and foreign banks were given more autonomy. 2. The Narasimham Committee Reports 1991 and 1998. These reports recommended significant reforms, including strengthening the capital adequacy norms, improving asset quality management, reducing the role of government in banking, strengthening the role of the Reserve Bank of India (RBI) in regulation and supervision. 3. RBI's role. A monetary policy framework. The RBI has worked on strengthening the monetary policy framework to maintain price stability and economic growth. B. Banking Sector Reforms Act 1993. The RBI introduced more stringent norms for the functioning of banks, focusing on capital adequacy, asset classification, prudential norms, corporate governance. 4. Technological advancements. A core banking solutions (CBS). Banks in India have adopted CBS for centralizing operations and improving service efficiency. B. Digital banking and fintech. The advent of digital platforms, mobile banking, and fintech solutions has transformed banking services in India, providing accessibility and convenience to a wider section of the population. Key challenges and future of Indian banking. 1. Non-performing assets (NPAs). one of the major challenges facing Indian commercial banks is the high level of NPAs, particularly in public sector banks. To financial inclusion, despite significant progress, there are still large sections of rural and low-income populations without access to formal banking. 3. Regulatory framework. Constant updates to the regulatory framework are necessary to cope with emerging trends such as digital banking, cybersecurity threats, and the global financial landscape. The role of banking has expanded from simple financial transactions to becoming a key player in national economic development. As India continues its journey towards a more digitized and inclusive economy, the banking sector's role will be pivotal in shaping the future.